Now on Overnights,
I believe in reason and common sense.
David Llewellyn-Smith from Macro Business with the Treasury of Common Sense.
Common sense never goes out of style.
Absolutely. Thursday morning, time for us to delve into the Treasury of Common Sense, the founding publisher and editor of macrobusiness.com.au, David Llewellyn-Smith. How are you, my friend?
Very well, Luke. Thank you. I hope you're well.
Yes, indeed, David. Very well. Thank you for jumping on board today. National account figures, they came out during yesterday, and I don't know what you make of them, but the economy looks like it's only growing 0.2 for the quarter. Can't be a good thing. And in fact, I think the only thing really driving immigration now is immigration. I don't know if you think that's fair or not, but what did you make of the numbers?
They are very dour indeed, especially for households, which is clearly most Australians. Yes, the economy grew 0.2, but per capita fell 0.5, which is, of course, population growth, which looks like will come in at about 640,000 people. So we've had a lousy growth with a huge growth in the population, which means, everybody's share of the economy has gone backwards pretty much for the last 5 quarters now. I mean, there's been a little bit of up and down there in the numbers, but, we're like minus 0.7% over 5 quarters in per capita terms. And that pretty much equates to falling living standards.
Yeah. You wrote for news.com.au this week, you say, there was once a time in Australia when all Canberra policymakers worried about was interest rates, and the cause for their worry was our world-beating household debt, which played out as political anxiety. You referred to the increase in rates before the Howard government fell, and that might have contributed there. But you draw the conclusion that, some people might believe that the current government, the Albanese government, no longer shares that view. And as you rightly point out, it's preoccupied with mass immigration, corporate grovelling, as you put it, I love that, and public spending. They don't have the concern that governments previously certainly have about interest rates, or that's the impression you get, isn't it?
It most certainly is. A part of the lousy GDP today, has been, pretty steep interest rate rises over the last 18 months that have really squashed household demand. But that inflation that's driven up those interest rates has been heavily driven by mass immigration and, the need to build out infrastructure, public services, housing, etc., which, has led to, a kind of stagflationary environment where we have this lousy growth, living standards going backwards, and interest rates stuck at quite high levels because, you've got too many inflation pressures in some key sectors, even though, inflation's coming off in others.
Yeah.
And so it does look like a formula that, is more ideological than it is focused on household welfare, and especially those who have got, big mortgages.
How do we compare with the rest of the world?
Pretty badly. In terms of, the prospects of this changing, I mean, immigration is probably going to ease a little, but not a lot by the looks of things. So those inflationary pressures around construction, housing, rents, etc., are pretty embedded, whereas other nations, Europe, for instance, where, they had immense inflation coming out of the Ukraine war, now has half the inflation rate we do, and has, their futures market are pricing about 2%, 200 basis points of cuts over the next 18 months. The US has had a lot of tightening to fight its inflation problem, and the Fed is expected to cut, maybe 6 times over the next 12 months, whereas Australia, where we may see some cuts before the year is out, but futures markets are maybe giving us 1. I suspect that maybe a few more because there's a big energy deflationary shock going on globally that's going to help us with our inflation problem. But in terms of interest rate relief, there's an awful lot more going to happen in other developed economies that have different growth strategies to Australia.
Yeah. It's funny, isn't it? They were all saying, that is in the political class, saying, oh, how good's this? A gift from the RBA, they're not putting rates up. Forgetting, of course, the fact that there have been, 12 or 13 previous rises, and people with mortgages are doing it really tough. I mean, they would have taken the no further increase, but it's hardly a gift when rates have gone where they've gone.
Well, that's exactly right, and there's a real inequity in the developing patterns as well, where not just those with mortgages who are really suffering, but there's a real class division that's age and demographically based in the numbers now, where you have youth and mortgagees really taking it in the neck with falling real incomes and very high interest rates, whereas baby boomers and stuff who have run down their mortgages and have savings are enjoying the higher interest rates. And another stat that came out in the national accounts today was that the tax take is now near record highs, because we've had this income, this wage growth that it didn't keep up with inflation, but it's helped bracket creep and the take for the budget, and so that's coming out of the youth as well and mortgagees. So there's a real unfairness that's developed in terms of who's kind of taking it for the team and who isn't.
Yeah. So from an economic point of view, politics aside, not that I needed to say that to you, I just worked out as I was asking you, but the stage 3 tax cuts in the middle of next year, for lots of people, that'll be the first real relief they get for a long time. Are they affordable, and should government proceed with them? There's no indication that they're not, but they are a government, so they're inclined too often to let us down.
Look, in cyclical terms, they're affordable. Commodity prices are still pretty robust. There's going to be another surplus this year. But in structural terms, if you think that those commodity prices will eventually fall as China slows as it is, then they're probably not affordable over the long run. They'll certainly add a bit to demand, so that's not going to please the RBA especially. Yeah. But at the same time, the tax take is so high that some tax relief somewhere in the economy is welcome.
Yeah.
And so, it's a bit of a swings and roundabouts, that one.
Yeah, fair enough. And this will be our last chat for the year because we move on to a summer schedule. So I've got to ask you, with the benefit of hindsight, looking back, was there something that the Treasurer did that really impressed you? Or, on the other side of that coin, is there something almost unforgivable? How do you rate the Treasurer's performance through 2023?
Well, I rate the Treasurer very poorly since he came in, basically. It's hard to pin it down to 2023 because they've made two big mistakes. The one we've discussed many times was energy, where they allowed the Ukraine war price shock to come to Australia when it was completely unnecessary, and that's created a huge inflationary impulse. And they overcooked immigration, as we've said many times, creating a myriad of problems on the supply side of the economy that, again, we didn't need to face. And those two blunders are half our inflation now. And so you take those out, and you would have immense interest rate relief coming to households. I'm not necessarily all for low interest rates, but right now you need relief for households because they're really being squashed to allow for growing population and public investment to accommodate it.
Mate, I love our chats with you, David Llewellyn-Smith, and also with Leith Van Onselen from macrobusiness.com.au. Can I wish you both and your families a very Merry Christmas, a Happy New Year, and I look forward to chatting with you again as we get underway early in 2024. Take care, my friend.
And to you, Luke. Thanks for having us this year.
An absolute pleasure. David Llewellyn-Smith, macrobusiness.com.au.